morning and welcome to the midweek edition of Business Morning. 55 minutes of current and relevant business conversations. That's what we do here on the program. I'm Ini John Mekwan. We start business from the global space where oil prices fell in early trade on Wednesday as markets are assessing the outcome of that US-China trade talks happening in London and is yet to be reviewed by President Donald Trump, with weak oil demand from China and OPEC Plus production increasingly weighing on the market. So look at the numbers for this morning. 24 cents has been shaved off Brent. That's 0.36%. It's now at $66.63 a barrel. WTI is also down 0.32%. That's about 21 cents. At $64.77 a barrel. U.S. and Chinese officials agreed on a framework to put their trade truce back on track and resolve China's export restrictions on rare earth minerals and magnets. U.S. Commerce Secretary Howard shared this at the conclusion of the two-day meeting that has been going on in London ended yesterday. However, President Trump will be briefed on the outcome before approving it, so nothing is set yet. Oil import data also from China earlier this week and ongoing production increases from OPEC Plus, which includes the Organization of Petroleum Exporting Countries and its allies such as Russia, were adding to the downside of prices this morning. Meanwhile, China's customs data shows that this week, the country, which is the world's biggest oil importer, brought in 46.60 million tons of crude oil in May. That's down 3% from the previous month, with imports of oil products falling by 12.9%. Now, reports suggest that Nigeria and Saudi Arabia's state oil giant Aramco are struggling to reach an agreement on a record $5 billion oil-backed loan after a recent decline in the crude prices, sparked by concerns among banks. It's expected to finance the deal. Well, the proposed facility should be Nigeria's largest oil-backed loan to date and Saudi Arabia's first major financial involvement in the West African nation. However, falling oil prices could force a reduction in the loan's size. And we know what's causing the fall in oil prices, among others, tariff from President Donald Trump. The sluggish pace reflects broader economic pressures, particularly the recent drop in oil prices driven largely by OPEC Plus shift in strategy to regain market share rather than restrict supply. And of course, there's also the threat to global economy from the tariffs. The World Bank has sharply cut its 2025 growth project for the world economy to 2.3%. That's down from 2.7% earlier projected, marking the slowest rate of global growth since 2008. In its Global Economic Prospects report that was released yesterday, the World Bank cited the impact of disruption caused by ongoing trade uncertainty around many countries following the introduction of tariffs by U.S. President Donald Trump. Just last week, the Organization for Economic Cooperation and Development, OECD, lowered its global growth outlook for this year, citing the fallout from trade and tariff-related uncertainty as key factors. Here in Nigeria, the central bank has extended its deadline for the recapitalization of bureau de change operators to December the 31st. You know, the initial deadline was last week. This comes after mediations between the Association of Bureau de Change Operators, AMCON, and top CBN officials, following the expiration of the second deadline for the recap exercise given by the Apex Bank. That was June the 3rd. The CBN had initially set the deadline for December the 3rd of last year, but later extended it by 6 months to give BDC operators more time to meet the new requirement. And we had the president of AMCON on our program last week telling us that only 5% of operators were able to meet that June 3rd deadline. So we'll see how many can make it by December 31st and if they'll be asking for another extension. The National Association of Nigeria Travel Agencies, NANTA, is asking the federal government to tackle the issue of cross-border ticket sales, where foreign agencies offer cheaper flight tickets for routes originating in Nigeria. Speaking on this issue, the president of the association, Yinka Folami, highlights the issue of foreign-based agencies undercutting prices for tickets originating from the country. He notes that it is cheaper to buy in Asia than in Nigeria if you can be a travel agency in Asia. So why can't a Nigerian travel agency, particularly when you travel from Nigeria? And that's what they're saying. It's called cross-border trading, and they say it's bad for the markets. Folami warns that this practice is damaging the domestic travel industry by allowing foreign agencies to undercut local operators. The federal government's economic reform is once again the focus of a civil society organization, and it's called Independent Media and Policy Initiative, which has been speaking on its impact on citizens. Was speaking at a news conference, the chairman of the Independent Media and Policy Initiative, Mr. Moni Akinshiju, listed the fuel subsidy removal, recent debt management strategy, as well as an increase in both foreign and domestic investment and a stable foreign exchange market as some of the impact of the tangible reforms of the federal government.
The economy is signaling its transformation to a credit-worthy jurisdiction. To lend credence to this, between 2023 and June 2023 and December 2024, at least 33 Nigerian states and the Federal Capital Territory reduced their domestic debt by a total of 1.85 trillion, out of a total debt of 5 trillion. This indicates a commitment to fiscal responsibility and a move towards greater financial stability. Evidence of growing confidence in the economy. With critical macroeconomic indicators evidently in alignment, investors are growing confidence in the economy by playing long-term with their investment stakes in Nigeria. They are staking more funds on longer tenor assets in the expectation that ongoing reforms would lead to improved macroeconomic performance in the years ahead.
All right, now, yesterday we got a reaction from Afrexim Bank to the downgrade given to them by Fitch Ratings, and it's, well, an important topic when you see where Africa is at this time, which is Africa is seeking to find its own feet and be independent of foreign loans, financial or non-financial. And we've seen Afrexim Bank, try to fill in that gap to be a financier of the continent's projects and reduce the dependence on international, multinational, multilateral financing agencies. And of course, as it would be expected, a lot of reactions following that. But we were waiting for Afrexim to, have the first say and get that reaction, which is what we got yesterday. So let's follow up on that and find out what Professor Olabisi Akikube thinks about this. Professor Olabisi is joining us from Canada. He is the Paul D. Crawford Chair in Business Law and Associate Professor at the Zulich School of Law at Dalhousie University in Canada. Prof, good morning, and thank you for joining us on the program.
Thank you, Ini. Good morning.
Yeah, so I'm sure you saw the reaction from Afrexim just trying to explain how they operate and denying the claim that they are part of a debt restructuring in countries like Ghana and all of that. And, what are your first thoughts concerning all of this, the Fitch downgrade and now the reaction from Afrexim?
So, Ini, thank you very much. The place to start with this is the fact that Afrexim Bank is one, if not the only institution that does it very boldly. It is one of the institutions of the African, that comprise of the African multilateral financial institutions that take seriously the task of lending to African sovereigns or African states loans that they need in really dire times, by which I mean contexts when most other international financial institutions, mainly international IFC and the World Bank, will not lend to them. One example of this is Zimbabwe. For a while, there has been the background challenge that has been asserted by Afreximbank, which I believe is true, that by virtue of their establishing treaty, they are a multilateral financial institution that has its status as that of a preferred credit status. And so what that means essentially is that when default happens by any of the sovereigns that they have extended loan facilities to, they will not be subject to haircut when that process of restructuring occurs. So you can then imagine with Ghana, Zambia, Malawi being in precarious situation with respect to their loan profile, it's not surprising that the conversation around restructuring has come up. Now, what is somewhat surprising, and I should say could be a very dangerous precedent, is that in the case of Ghana, about a year and a half ago, their former Minister of Finance came out publicly to say that they will not consider having a haircut or restructuring for the loans that has been provided to them by Afreximbank. And so 2 years later, or a year and a half later, coming to a week ago, to see a new government changing completely the tone from which they declared publicly is part of the background to this. And of course, the same has been repeated by Zambia. And so that doesn't make it entirely true that restructuring is already going on. Because as you will see, what Afreximbank has said, quite in my view, also true in their interpretation of the establishing treaty, is that the Fitch ratings that sought to downgrade their rating and almost considering it at the risk of junk is that they misclassified their loan as a non-performing one. And they say that is not true in their own report. That's on the technical sense. Fitch Rating might say, look, we have a way by which we determine our own, and we have done so. But a crucial point at this stage is to note that Fitch Rating, like Moody's, like all the other ones that comprise of the three major credit rating agencies, have always missed the context in which African multilateral financial institutions operate. They look at them the way that others in the Western states operate.
Prof, so before you go to that line of conversation, so now Afrexim has come to clear the air to say, there was a wrong classification. What should happen now? I guess we should be waiting to hear from Fitch, either to say, oh, there was no misclassification, or we accept that there was a misclassification. What should come up next?
Oh, well, coming out to say that we accept that there's misclassification may be going too far because this is the business that they do. And that will, again, further bring issues around the integrity of what Fitch Rating does. I think what is essential here, you've seen Afreximbank clearly state that they are not under any form of restructuring. And so it may look like at this time there's an impasse that is going on. What we don't know or won't see is that parties will surely be talking to each other. And it's not impossible that Ghana or Zambia or any of the other countries, to be honest with you, come out to then indicate that they found a way to go forward with Afreximbank. They are the ones who have the loan to be paid, and they have to pay it. Fitch will argue they've done their job. And Afreximbank will continue to make their own point that they are not restructuring.
And this also points to the need for the Africa Credit Rating Agency. I know the conversation has started, and I hope, the normal African elements will not crop in, either to disrupt the implementation or sentiment around it.
You are right. The African Credit Rating Agency, which is, an institution that is being set up as an alternative, one that is, homegrown, autochthonous to the continent, as a good alternative to the big three, has been spearheaded by the African Union, the African Peer Review Mechanism. And as you have noted, a lot of work has been put in there. I do think there's every reason to be cautiously optimistic about the fact that the African Credit Rating Agency, when it is fully in force, will be able to do its work with transparency, integrity. But we hope that African states will back it with the necessary financial support as well, but also, just treat it seriously so that the task of, attaining not just an African legitimacy, but a global legitimacy will be one that will be achieved in no time from when it starts operating fully.
Yeah, so Prof, I met you. We were together at Abidjan for the AFDB, and this was part of the conversations there. And one of the sessions had the CEO of S&P Global, and of course he was asked what he thinks about the Africa Credit Rating Agency, and he said, "Oh, it's welcome. It will serve as a competition." But how do you see, let's say, that the African Credit Rating Agency works as we hope that it would? What kind of picture does it present to the world, to the issue of ratings? Is it a competition? Would it be complementary? Would investors say, "Oh, let me compare the Africa one and then the Western ones"?
So, a couple of ways to respond to that. Number one is that it is not just simply a competitor. It will be, if it functions the way we anticipate, an organization that accounts for proper context in the classification of loans that African states or sovereigns have. That means that it counters what has been perceived quite rightly as bias by the three major rating agencies up to now. And so to just simply say that it is a competitor, even when it is not yet in place, I think is defecting from the real issue. Number two, as you said, is to make it global. It is essential that African states take it seriously. It means that issues around its, administration, as I've said, its transparency, will become very critical to building integrity and legitimacy amongst those who would approach them and the work they've been putting out. And up to date, in terms of how they've been stepping out in responses, I think there's a lot that is there in terms of the quality of work that has been thought through about this. Now, we look at African regional organization schemes and how they have worked up to now, one might say there's every reason to be very careful about whether this will be a reality. But the fact that African states have lived in a world that up to now has entirely depended on credit rating agencies that are outside of the continent speaks to the severity, to the importance of the African credit rating agencies and agency. And I hope everyone who cares about the cause of Africa will be hoping that this goes right, but will also be doing what is essential to support the work of the African credit rating agency when it comes to full operation.
All right, Prof, thank you so much for that. Of course, this is a continuous conversation. And I mean, I do hope that Africans will come together, and speak in one voice and take away the sentiment around the rating and the rating agency. Thank you so much, Professor Olabisi Akugubedi, Purdy Crawford Chair in Business Law and Associate Professor at School of Law at Dalhousie. Thank you so much for your time and your views on the program.
Thank you very much. Good to see you again.
Good to see you too. All right, it's visa time. Yeah, so today we have, well, an executive from Visa today, good. Director of Business Development, Visa West Africa, Oluwatoyin Badeji, joins us right here in the studio. Hi, Oluwatoyin, good morning, welcome to the program.
Thank you for having me, Eden.
It's good to have you. Well, I know that, I mean, you are in West Africa. Let me just throw this in. Last week we talked about PAPS on your segment, payments, cross-border. Is it getting better from Visa's perspective? I know you're preaching digital payments and all that, but since we just finished a conversation on Africa, is it getting better on the continent?
I would say yes. I've been in payments for over 13 to 16 years, and I've seen it grow significantly. I've seen the adoption rapidly expand throughout the continent. And with digital payments, it opens a lot of barriers and opens new segments of customers to our businesses and SMEs in the continent. So yes, digital payments it's actually expanding and it's growing rapidly.
Happy to hear that. Well, just before we delve into the conversation, let's give you some insights from Visa's survey. There you have it. That over 40% of SMEs find value in card payments for the price charge, and close to 90% believe that card payments positively impacts their revenue and footfall, showing that digital payments are more than just a convenience and their growth driver. The lack of digital payments adoption is hindering sales growth for cash-only SMEs. 44% of these businesses, that's under the survey, report lost sales due to customers not carrying cash, which highlights the potential benefits of offering digital payment options. There's an appetite they find among SMEs to adopt digital payment solutions, while cash remains widespread. Over 50% of merchants prefer to receive payments digitally, and this indicates a growing foundation for digital payment adoption. And that's why they're asking for supporting POS adoption is crucial, as 76% of cash-only SMEs intend to acquire POS systems in the near future. These are some of the findings. But there's a need to expand this more, they say, to provide solutions such as lowering barriers to entry to encourage more SMEs to embrace digital payment. So since we have you here, Oluwatoyin, please tell us, what are some of those barriers you think should be lowered to allow more SMEs into the digital payment space?
So I would say yes, barriers still persist. We see such barriers include preference of customers to pay in cash. We've seen an active infrastructure barriers also, and we see concerns around security. To overcome these barriers, we have to do it as a joint effort. I mean, the government has to design policies that incentivize digital adoption. Financial institutions and fintechs need to actually innovate. They constantly innovate to provide affordable digital solutions to these merchants and consumers. From a Visa perspective, we are tackling this through awareness campaigns, through financial literacy, as well as partnerships. We're partnering with different stakeholders to bring cost-effective solutions that are safe and secure, so that trust is in the system to actually adopt more digital payments.
So, I mean, let's talk about safe and secure. What are some of those security trends, that threaten this entry of SMEs?
I would say some of the trends or limitations might include the fact that they don't feel too secure with using the digital payments. But the beauty about it is that new emerging technologies as at today are making transactions more safe and secure as ever. At Visa, we use what we call tokenization to replace CAT-sensitive data with tokens, so that if along the way, for some reason, the information is intercepted by any parties, the information is useless to those parties. We have AI-powered solutions that help spot and stop suspicious activity in real time. We also have things like biometrics, fingerprints, and facial recognition, which is fast becoming a trend. But as we are doing this, we all need to work together to expand or to improve the education and the visibility of digital payments. When you marry all these solutions with a zero trust model, we are able to provide safe and secure digital payments around the continent and the region.
Yeah, so you also mentioned the issue of infrastructure.
Yes.
It's a reality. And when you talk about facial recognition, fingerprints, we know how these things really are. And while that is more of a government thing, one would wonder if there's a way the private sector like Visa can push for solutions and bolder moves, around closing this infrastructural gap?
Yes, so we have, and that's why I mentioned that we actually partner with a lot of parties to be able to bring this into play. So yes, we do that with fintechs, we do that with financial institutions, and when we look at it, we've seen a lot of adoption. As most new technologies, you might not see it spread immediately, but I would say in the last couple of years, we've seen a lot of adoption with different types of digital payments. We've seen some people who have launched things like contactless. Contactless has been launched in the market, and with these technologies, it gives you the ability to be able to do other things such as the biometrics that I've said and different other innovative solutions.
The contactless doesn't seem to be catching on as fast as we hope.
I would say it is, but we're still working with the relevant stakeholders to ensure that with anything with any change, you might you might find a little bit of resistance, but through our education and awareness campaigns, we are actively working to ensure this works.
What about costs? Sometimes it does seem like it's cheaper for you to work with your cash, than for you to do all the transfers and digital payments.
So, I mentioned that I wouldn't say it's cheaper for you to to work with cash. There's a term about if with the cost of things in the economy right now. Imagine if you wanted to buy something of 1 million. Imagine dragging 1 million cash around with you. But with your digital payments, with your cards and every other form factor around it, you can carry as much as you like, and nobody knows what you are carrying. So I would say it's fast. It's growing. We did a survey recently, and it shows that out of 500 Nigerian consumers, a high percentage have already adopted, completely trust digital payments. Another, say, 80-odd% have said that they've done extras to enable that security through two-factor authentication or alerts. As well as we've seen a high percentage also saying that in the next couple of months and years, they're going to adopt more digital payments in the things they do. It also opens from SME perspective and business. It opens new channels. I mean, when it's cash, it means that you're stuck at your immediate environment. Today, I can be an SME sat here in Nigeria or Lagos, and people are buying all the way from Australia because I'm able to give them a payment, solution that I can accept payments anywhere in the world. So it's expanding the economy, and it's something we need to embrace, especially with a big economy like ours.
And because we have a majorly informal one, you need more enlightenment to win their trust.
Yes.
Because that's also another aspect of it.
Yes, I would say so. I would say that trust is happening. A couple of years, the first time I would go to, I would say Sierra Leone, which is probably like 12 or 13 years ago, I noticed that a lot of people on my flight were actually traders coming to Nigeria to pick up goods and services. And along the line, when I keep traveling, I've noticed that these traders are now not, you don't see them all the time. All you see is their goods. They found ways to actually make those payments as opposed to carrying themselves into the market. So you see their goods with you on the flight, but you don't see them in person. So yes, that adoption is growing. And a lot of these people actually deal with people in the formal sector, and they are making those payments. I would say the informal sector actually adopts technology and change much faster than
really.
Because I think they are more open-minded to explore, and they also want their commerce to move.
But are we taking this message to the rural areas?
Yes, with our partners, we do that. We collaborate with fintechs who a lot of them have unique use cases, some in agriculture, some in the informal market, and we're able to actually take this message into those areas where we can expand.
So what would the economy lose if we do not follow this trend of digital payments?
I would say that the world is a is a connected society now. So I mentioned earlier that you have people sat here and they are doing a lot of purchases or transactions at different sectors of the world. So imagine in the past where you literally had to always just sit down and wait for your immediate community to shop from you or to buy your goods. Now you're not dependent on your immediate community. So imagine that amount of transactions and inflows that we will not be seeing today. And as you know, we have a very large SME base who are very good in doing a lot of things. You see people export things like plantain chips. I mean, that is very, very, you see a lot of people actually asking for that. And that's how they make those payments today. They don't have to be right in front of you to actually do those things. So there's a lot to lose if we don't expand, but we're going to get there. I think we're a big economy, and we're an economy who actually is open for change.
So how does Visa stand out? Because, I mean, you talked about the fintechs, we have the traditional banks, and of course we have others like Visa. What's different about Visa?
So for us, our vision is to make sure that everyone and everywhere gets paid in the best way possible. And we constantly are innovating. We constantly are providing safe and trusted solutions to our key stakeholders. So with what we provide, we're also, security is also a very key goal and focus for us, as well as growth. So that is actually one of the things that drives our vision at Visa.
And I'm sure data protection,
Yes.
that should also be a priority for Visa.
Yes, it is. I remember when I said that we use things like tokenization, where we strip out sensitive data and replace it with tokens as at today. So if for any reason any of the information is intercepted along any channels, it's typically useless to any parties intercepting those transactions. We also have a lot of, we constantly are innovating and introducing AI-powered risk and fraud solutions into the market to reduce account-to-account and card-not-present fraud. So, and we're not only providing those solutions to our partners, but we are ensuring that they understand how to use these solutions, as well as create awareness within the market.
And I hope the bigger economy, the bigger Nigerian economy, is also ready for some of these things and adopting it, whether from government policies to individuals and to small businesses, because yesterday I had a conversation on small businesses adopting ICT. This is all part of the technology. And then my guest then noted that while the government seems to be doing a lot, it's uncoordinated. It's not coordinated. The efforts are not coordinated. And so that stands as a barrier, talking about SMEs adopting the new way of life, the ICT, the digital payment technology, AI, which is the way of the world at this time.
I would say I would look at it in a different direction. As I mentioned, we have a lot of SMEs in this economy, and we've seen a lot of adoption within that space. We have various solutions and products that are tailored for SMEs that provide them with that information and education on new technologies, on new trends happening in market, as well as the ability for them to expand their customer base. So these are things, and we've seen when we look at the data that we have, we've seen a lot of adoption from actually SMEs, because SMEs, we will say they are the hustlers of hustle. So so they always want to know that they are able to sell as much as they can, as fast as they can. I mean, it's not, they are the ones thinking and fending for themselves. So they are happy to embrace new technology, new things that makes their businesses more efficient and secure while doing so. We also partner with various players around around the ecosystem. We partner with government, we partner with financial institutions, we partner with banks, we partner with large merchants, and even acquirers. So yes, that partnership, we can still do more, but that partnership exists today.
Well, I'm glad you have a positive outlook for the SMEs, because I mean, as you said, that about 90% of the jobs in Nigeria is created by SMEs, so
Yes.
they are really important in the midst of all of this. Thank you so much, Oluwatoyin Badiji, Director, Business Development, Visa West Africa, for your time.
Thank you for having me.
All right, let's take a break now. When we come back, building ethical entrepreneurship, QNet has that message. That's after the break. Please stay with us. It's time to discuss QNet's journey in Nigeria, building ethical entrepreneurship. I have two of them here representing QNet. I believe one is TransBlue, one is QNet. Okay, so for QNet is Nana Kwate. She's a senior legal counsel for Sub-Saharan Africa at QNet. Well, Nkema Kalom is Eluago is TransBlue product trainer. All right, what a combination. But just tell us, let's start from QNet.
Yes.
What's QNet all about? What do you do?
Okay, so QNet is a lifestyle and wellness direct selling module company. So we belong to the direct selling industry. Direct selling simply is a
Is that
sale
a
by word.
door-to-door?
Yes, sale by word of mouth, referrals. So you would not typically find our products in retail shops. Yeah, so
Doesn't that limit you? It's a digital world now.
Actually,
Everybody's-
research has shown that word of mouth sales go faster than retail sales. So, I guess we are in the right business.
All right, so what has TransBlue got to do with QNet? What's the connection?
TransBlue, you want to go?
Yes, yes.
No, you go
Okay,
ahead.
awesome. So TransBlue is actually a logistics firm, right? And we partnered with QNet to help to distribute the product across the region here in Nigeria. We also support QNet also with product awareness, trainings, and sensitizations as well.
Okay, so this is about wellness and lifestyle.
Lifestyle, exactly.
How popular is that in Nigeria? It seems in Nigeria everybody just want to hustle, get the money, and make food, pay rent, pay school fees, live life.
Exactly, live life. Yes.
Oh, you
live
caught
life.
me there.
Yes, live life. And so QNet is all about wellness and lifestyle. Lifestyle, when I talk about lifestyle, I'm talking about, we wear jewelry. See how nicely you are done?
Oh, thank
we
you.
have jewelry, we have cosmetics, we have health supplements, we have wellness products. These are, we will say, alternative medicine, because our products, we have health supplements. Those are supplements your medications and all. But we also have products like the Amesqua range of products. These are products that use your natural frequencies to help your body. So we have the chi pendant. The chi pendant is a product, it's one like a chain. Actually, I think he has one on. It's a pendant one to actually enhance your biofield. Yeah. That is the energies around you and protection against radioactive waves. So we have all these products.
This sounds elitist. Is this for just anybody?
It's for everybody. Everybody needs good health,
True.
so it's for everybody.
True.
Okay, so your products go from edibles
Edibles, these are the consumables.
to what you can do with your body, to what
and
you
what you
wear,
put on your skin.
and what you put on your skin.
Exactly, and what you put on your mind. We have educational products.
True.
Oh, that's a wide range. So how exactly does it work? You do door-to-door, mouse selling. That's your adverts model. So how really does it work?
Okay, so we have a network marketing arm, which is we build micro entrepreneurs.
So network marketing is a very sensitive topic in Nigeria.
Exactly. So that is why we are intentional about ensuring transparency, ensuring ethical practices. Now we have, like I mentioned, network marketing, where individuals who want to be entrepreneurs, but of course don't have the big capital to start big businesses, are able to work with our company. Now what they do is to introduce our products to other individuals. Once purchases are made, they get to earn some commission based on the level of points they have built up over the period. So.
And who's your targets with this?
Actually, everybody. We have students. We have professionals. We have the ordinary person on the street, because the company actually believes in rhythm, and rhythm is raise yourself to help mankind, so that when you have raised yourself to make something of your life, you can lift the other person out of poverty.
So this is no career target. It's just anybody, no requirements, no. Oh, okay.
Once you want to be an entrepreneur, the minimum require. Of course, you need to be able to use digital devices because it's online.
Oh, I thought it was door to door.
No, yes, door to door. As in, when you purchase the product, we deliver to you at your doorstep.
Okay, that's where TransBlue comes.
That's where TransBlue comes in.
Oh, okay.
That's where TransBlue comes in. But whatever purchases you want to do, whatever business you want to do with us, is online.
So, TransBlue, how long have you been doing this logistics thing in Nigeria? We know the terrain and some of the things that go with it, especially for a state like Lagos. You have traffic, you have the rough drivers, and and all of that.
So it has actually been an interesting journey. Okay, it's been very, very challenging, as you have mentioned, but we try our best, okay, to deliver on our promises to the clients that we have. And actually, you can see the partnership with QNet, we're actually doing a whole lot. We've been trying to address all the logistics issues that have been existing even before we came on board with QNet. And I can say so far, it's been actually amazing.
So QNet, tell us how. I'm interested about the rhythm that you talked about. How do people start? Where does the ladder start from before you can get someone and all?
Okay, so once you express your interest in our business,
that would be online. That would be in your office.
No, online. So usually a distributor would approach and share the vision of the company. We'll share the products. I have purchased this product, and I think that it will be good for you. And there is also the aspect of making a business, running a business out of it. Once you express interest, you go online, www.qnet.net. You go online, and every information you need about the company is there. You conduct your own research. And once interested, you are directed on how to register, what to purchase. Of course, as a network marketing, you need to purchase a qualifying product. So once you purchase a qualifying product, you are shown exactly how you can earn in the business. And there are training tools. There are enough information on the online. And we have trainers as well who organize online trainings and physical trainings. Yeah. Building your business, every resource you need is provided.
So I wanted to ask that you have this, and people can start from there, and people are sure there's no scam, and all of that. I guess that's where the ethical entrepreneurship, because that's what you call this conversation.
Exactly. So one of the ways we are ensuring that people do not fall prey to scammers is this program and other programs with the media. And we have had several awareness campaigns to ensure that people know exactly what the company stands for and do not just fall to what somebody else tells them. So we have awareness campaigns. 2 years ago, from 2023 to now, we have had several awareness campaigns, and we have actually also had various programs with our FinGreen program. It's a financial literacy program that we have had twice in Nigeria, once in Ghana, and then in Turkey as well. These are all aimed at equipping the individual with enough knowledge so that whenever they are approached by anyone and the person says something else that is not from what QNet has said, they are able to tell. So we rely on the media. Well, you rely on the media to send a message out there.
The media is always there for you, but what's the source of your products? I mean, pardon me, we're talking about Nigeria now.
Yes.
Trump is crazy about protectionism. We want to learn from that.
Yes.
So these products, are they in Nigeria? At least are they from Africa? Are we developing our economy on the continent at least with some of your products? And since you have a wide range of it.
Yes, yes. In fact, it's also been a passion of the companies, because wherever we find the business, we don't want to just bring in something from Asia and then Africans don't get to benefit. No. We don't do that. In fact, we have a jewelry line from Tanzanite, from Tanzania. When we started going on the Tanzania market, we realized that Africa has something to offer. And wherever we find ourselves, we have conducted research. And you have to know that we have a brand to maintain. We have a quality standard to maintain. So we conduct intensive research before we bring any product on. So we have started sourcing local content from Nigeria, but it's still under research. So we can't disclose now. It's still under research. And we have Nigerian resources. Yesterday we were at Covenant University. We one of their professors, the former Vice Chancellor, Professor Abiodun Adebayo, is on our scientific advisory board. He had conducted some fantastic researches with our products, and he came to he broadcast his research findings, and it was an amazing program. I was very impressed.
Those huge Nigerian contents
exactly.
Then you have a product, FinGreen. What's that about?
So FinGreen is a financial literacy program. It aims at equipping young people and especially women on financial literacy. Okay, everybody has dreams, everybody has aspirations, but how to make it happen, how to manage your finances, how to ensure that you don't have bad investment, how do you save towards realizing your dream? These are the things that the FinGreen does. FinGreen is a literacy program where we train trainers. So it's a T3 thing. You train the trainer so that they can multiply the effect of whatever they have studied. And we have had this twice already in Nigeria from 2022. And we have had it in Ghana, in Turkey, and it's an ongoing program. It all falls within the rhythm, the Raise Yourself to Help Mankind concept.
And it's all accessible through your QNets
exactly.
and all of that. And
yes.
you also talk a whole lot about making impact as a company. What have you done? What can we expect in the future?
Yes. So our impact, aside the product, the fantastic products we have, we also believe in partnering with foundations like the Lagos Food Bank to help the ordinary person on the street. You know, during festivities and other celebrations, we are celebrating in our homes, but there are vulnerable people on the street who don't know where the next meal is coming from. And that is what we do. We partnered with the Lagos Food Bank. We have also partnered with the Tosam Jasmine Foundation to help vulnerable people. And that's some of the things we do to impact the people we sell our products to.
Mm. So from TransBlue,
yes.
What's in the future? What logistics do you have to support this rhythm?
Yes.
Or is it rhyme?
Rhythm,
yeah.
Rhythm.
So
yeah. Rhythm without a first H.
Because I saw the spelling and I was confused. I was like, am I saying the right thing?
Yes, thank you so much. So in the future, we're looking at doing amazing things with QNet. The product-wise, also the awareness trainings as well. We're looking at doing a whole lot with QNet. Also supplying these products even to remote areas of the country where currently...
But you guys, are you outside Lagos?
Yes.
No, yeah.
Like where?
Okay, Abuja as well.
Yeah, Abuja as well.
You guys are in the big city.
Yes, yeah. You have an
That's why
office in Lagos and Abuja.
partnerships come in. We have delivery.
Because if you say you're taking it to every part,
yes,
then you need to spread your wings to outside the.
In fact, see, I have heard a story of how TransBlue delivered products. It took 2 days for the delivery guy to get to the remote part, and they were committed to. They delivered. Yes, they were determined to do that.
Yeah, that's why I asked him about the issue of logistics, because we know logistics is at the heart of business.
Definitely.
And the terrain in Nigeria hasn't really developed that much. So that's so that's why I'm asking, what's the plan for the future? How do you hope? Some people are using what's this thing to deliver
the drones?
The drones.
Yeah.
So do you have that kind of a plan?
Those are all in view. And we are working towards all of that. Thank you.
All right. Parting words from QNet?
Please, this is QNet. If anybody comes to you talking about travel opportunities, talking about education abroad, free travel abroad, or facilitation to go anywhere outside Nigeria without much stress, it is not QNet. QNet is about products. QNet is about online courses. QNet does not offer job opportunities. QNet does not offer travel opportunities. This is QNet. And I may just want to leave the addresses of TransBlue just for your learning. TransBlue is, like we mentioned, they have an office in Lagos, in Lekki Phase 1.
Yes.
And then in Abuja, Wuse Zone 1
Yeah.
is where you find TransBlue. So that is it.
All right.
Thank you so much.
Thank you so much, QNet and TransBlue, for your time, and wish you the best.
Thank you.
As you spread your wings and tentacles
Thank you very much.
in Nigeria. All right, so the program is still Business Morning, and because we're almost out of time, we just head straight to the United States. Of course, we know that the U.S. and Chinese officials have agreed on a new trade framework in London. Told you about that earlier. But in the United States, there's the dividend tax. Tax rule raises flags for foreign investors. And, President Trump is also talking about diaspora taxes. We have Maria Bird, our correspondent in Washington. Hi, Maria. Good morning. Good to see you this early morning. So tell us a bit more about this dividend tax.
Well, this dividend tax is going to be a foreign tax. So this tax will be on companies that are foreign companies that are doing business in the United States. And this really is going to be focused on those countries that the president feels have unfairly taxed the United States. And so this is all in alignment with the tariff programs and the tariffs that the president has put forth. And so this is something that mostly Democrats, there are some Republicans that are a bit concerned about it, but it has passed the House. So it's now before the Senate. I'm sure you all have heard the term the big, beautiful bill. This is part of that big, beautiful bill the president discusses. And so the concern is really how it's going to have an impact on the stock market for those companies that invest in the United States that are foreign companies.
Determined to put America first. Is that part of this?
Yes, you're exactly correct. The focus on America first has been kind of ever since the campaign has been the president's message, has been the president's mission for his administration. And so this is all in alignment with what he believes will be putting America first. The question, though, is really around how it's going to impact those companies that do business in America and hire Americans. And so will this have an impact on employment as well? And so there's a much larger picture here. And then the idea around if those foreign investments will leave the U.S. and if they will continue to be a part of our stock market, and if we will continue to see some of the financial benefits. But as we have seen before, the president clearly has a strategy, and whether or not his strategy is to bring people to the table for this one, I think we're just a few days from seeing how this will all pan out, if this bill even passes the Senate.
Yeah, talking about Bill, Maria, I mean, Nigerians, we're worried about that. I think about 2.5% or so on diaspora remittances. We know that will greatly affect Nigeria, because Nigeria has a huge dependence on diaspora remittances. What's the talks around that now?
So, the bill being passed is something that I think we will have to look to see. We know that the Republicans are heavily supporting it. We know the House is heavily run by Republicans. But whether or not this will be able to pass the Senate, I think is something that we are not quite sure about. It might not pass the Senate, but as we know, with such a strong influence of the Republican Party, this could potentially impact it. And as you said, Nigerians having a heavy impact, especially an economic impact, in the United States. How this will have an impact on them will obviously impact how they do business in the United States, and if they will continue, if they will make the decision to continue, because the taxes are going to be a bit high. You're talking potentially 20%.
All right, Maria Bear, thank you so much, Channels TV correspondent in Washington. Thank you for your time this morning. So that's it on the program. Thank you so much for being a part of Business Morning. Unfortunately, we couldn't have Will come in today, but don't worry if you miss her. 1 o'clock, Willie Bong will be here. Also be here for Business Incorporated, where we'll give you 55 minutes of updates from the world of business. That's 1 p.m. I'm Ini John Mekwa. Talk to you later.